The following video describes a safe harbor overhead rate calculation. It's also known as the indirect cost rate. Why is an indirect cost rate needed? An indirect cost rate or overhead rate is needed on cost-plus contracts to fully compensate you for your indirect costs. Once computed, an indirect cost percentage is applied to your direct costs, and then profit is added to both. It should be noted that the profit percentage is determined by PennDOT and is not something that you have to do.
So what is a safe harbor overhead rate? A safe harbor overhead rate is an interim rate that may be used for up to 3 years for eligible and qualified firms. The safe harbor rate is determined by PennDOT. The current office safe harbor overhead rate is 110%, and the current field safe harbor overhead rate is 95%. Those are rates established by PennDOT. A safe harbor overhead rate is easier and less expensive to accomplish than other options, especially for those entities new to the process. However, it should be noted that using a safe harbor overhead rate may result in a lower overhead rate, and you will be bound to the safe harbor rate for the duration of the affected agreements, even if you later complete and submit a larger FAR compliant rate. We will now describe the components in more detail.
So first, who is eligible to use the safe harbor overhead rate? Well, consulting firms that provide engineering and design related services may choose to apply for a safe harbor overhead rate if they lack financial expertise to develop an overhead rate, they lack financial resources to develop an indirect cost rate themselves, or to hire a certified public accounting firm to develop an indirect cost rate for the firm. They are a new startup firm that does not have contract historical cost data. And finally, you can use this rate even if you are a well-established consulting firm, but you lack experience with federally funded contracts. So, who is not eligible to use the safe harbor overhead rate? Any consulting firm that previously had a FAR-compliant overhead rate accepted by PennDOT or any other state agency are not eligible to use the safe harbor overhead rate. How to apply for a safe harbor overhead rate. Appendix 3G in Publication 93 provides guidance on how to apply for a safe harbor overhead rate. Appendix 3G also lists the required documentation that must be completed and submitted in the first year and in subsequent years. All documentation will need to be combined into a single PDF and uploaded to PennDOT via the ECMS portal. That uploading process will be described in a subsequent video. Once approved, a safe harbor overhead rate is valid for 18 months from the end of the fiscal year. So if your fiscal year ends at December 31st, 2021, and if you get the safe harbor approved, that rate will apply for 18 months from December 31st, 2021. So the first place to start when you want to apply for the safe harbor rate is to locate and read Appendix 3G from Publication 93. This document describes the program, who is eligible to qualify for the safe harbor rate, and how ultimately to work toward and accomplish a compliant job cost system, which would then allow you to remove yourself from the safe harbor overhead rate program and get into a FAR 31 compliant overhead rate. This document goes into more detail about the components of a compliant job cost system, including a labor charging system, an accounting system which separates indirect and direct costs, an accounting system which separates allowable and unallowable costs, and a compliant job cost system which is general ledger driven. So this document will describe these features which will need to be achieved in subsequent years once you enter the safe harbor system. Also at the end of this document is a timeline or a compliance components schedule. And it goes into detail about what needs to be submitted in the first year, which we will talk about later in this video. Here are the things that would need to be submitted in the first year. And it goes on to indicate what needs to be submitted in years 2, 3, and 4. On the screen now is Appendix 3H from Publication 93. The document is called Safe Harbor Overhead Rate Certification. This is one of the documents that needs to be completed. The top line indicates the name of the entity seeking the safe harbor rate, and then there are a series of certifications that must be met. The first one is that I have reviewed the PennDOT Safe Harbor Overhead Rate Policy and the Compliant Job Cost System document, and that is Appendix 3G from Publication 93, which we will talk about in a minute. The name of the firm has not had a Federal Acquisition Regulation Part 31 FAR compliant overhead rate previously accepted by PennDOT or any other state or cognizant agency. That the firm will provide PennDOT with a FAR compliant overhead rate after a maximum of 3 years in the Safe Harbor program, unless approval is obtained from the Contract Management Section Chief to extend beyond 3 years. That you will stand by the Safe Harbor overhead rate for the duration of the affected agreements and will not expect additional reimbursement for amounts above the requested Safe Harbor rate based on any future audits. And finally, you have to certify that you agree to develop and utilize a compliant job cost system that includes the following things, which are shown on the screen, including a FAR compliant labor tracking system, an accounting system which separates indirect costs and indirect costs, an accounting system which separates allowable and unallowable costs, a compliant job cost system under general ledger control. So those are targets. Those are things you will need to do over the next several years once you enter the Safe Harbor program. And of course, when that is all indicated and signed, then you will then sign the document and date it of the process. The second thing you must complete is Form Appendix 3C in Publication 93, this form. This is Form Appendix 3C. Again, it can be found in Publication 93. This document is called Certification of Final Indirect Costs. So this document will need to be completed when you apply for the Safe Harbor rate. You will complete the name of your firm, the indirect cost rate proposal. So in this case, if you're applying for the Safe Harbor program, it would be 110%. You would then apply the date. What is the date that you actually are submitting this form? So it would be the current date. And then you would also indicate the fiscal period covered for this Safe Harbor rate. Typically, it's January 1st to December 31st for most companies. Your fiscal year might be different, but whatever your fiscal year is, it needs to be submitted and entered on this line here. Essentially, then you would read the certifications and you would then sign the document. Put your title and the date that you signed the document. So this would be how you complete Appendix 3C from Publication 93. And then this would be one of several other documents which we will go through that ultimately would have to be uploaded into the ECMS portal to get your overhead rate approved. The third item you must complete is something called the AASHTO Internal Controls Questionnaire. As a bit of background, AASHTO is a nonprofit, nonpartisan association representing highway and transportation departments in all 50 states. The questionnaire that we are referring to covers many topics, including ownership, number of employees, company financial information, but the primary goal is to provide information about your accounting and financial reporting system and your internal controls. PennDOT may use the questionnaire to assess the capabilities of your firm's accounting system. It's a lengthy form, which we will go through next. What you see on your screen now is the AASHTO Internal Control Questionnaire for Consulting Engineers. You must review and complete this document to the best of your ability. The document is approximately 15 pages long, and I will not go through each question, but I do want to go over some of the highlights for your information. The beginning of this form is your name of your company, your taxpayer identification number, your address, your fiscal year end date, the date that you prepared this document, the time period covered, and where your accounting records are situated. And then the document goes on to discuss some other things that you will need to include as part of this package. Things like your post-closing trial balance and financial statements, if you have them. Your current chart of accounts that ties to the financial statements, if you have them. A sample timesheet, a company policy for vacation and sick leave, the company's bonus policy, and other written policies. Those are documents which you may or may not have, and if you have them, you need to submit them. If you don't have them, you need to indicate that you do not have them. And then the document goes through when your company was formed, what kind of entity is it? Is it a sole proprietorship, a partnership, a C corporation, an S corporation, or other? Are there any parents or subsidiaries? And then it gets into ownership. Who are the owners of your company and what are the ownership percentages? If you're the sole owner, then your name and your title, and you would have 100% in that first row. Then they ask for things like what types of services do you provide? And they would ask that you fill in one or more of these things to describe the work that you perform. Where your offices are. Do you have more than one? If so, where are they located? Then it goes into the number of employees, how many full-time, how many part-time. It asks about your revenue for state, federal, local, and commercial or private sources, and your revenues for government projects versus non-government projects. So this is the type of information that they are asking in this ICQ, this internal control questionnaire. And then the document starts going into things about accounting and your fiscal period and your accounting method or basis, whether you're on a cash or accrual basis. And what are your accounting policies? Do you have these accounting policies? You may or you may not. So go through this entire questionnaire, answer it to the best of your ability, and the questions get quite detailed. But again, the purpose of this document is for PennDOT to see if your safe harbor rate is applicable and if you qualify for the safe harbor rate or if you do not qualify for the safe harbor rate. In many cases, I think most of these questions will be no or you do not have them, which is why you're in the safe harbor rate program in the first place. I just wanted to describe this document for you to show you that it's something that will need to be completed to the best of your ability and then ultimately uploaded into the ECMS portal. So the document continues down through asking about accounting software and job costing and accounting records. Do you have them? Do you not have them? And that type of thing. So this gives you a sense for another document that needs to be completed as part of your application for the Safe Harbor program. I will not go through the rest of this at this point, but again, is something that you will need to complete. The fourth document that you will need to complete for your Safe Harbor application is an overhead schedule with projected costs. Now, it should be noted that these are projected or estimated costs and they're not actual costs. Actual costs are not required until year 2, once you are in the Safe Harbor program. The following spreadsheet is an example of a document that you will need to supply when you apply for your Safe Harbor rate. Now we see the sample overhead schedule that is a requirement for you to submit for your Safe Harbor application. This is a sample calculation. The source of this is the AASHTO audit guide in Chapter 5. If you search on the internet using Google, you can find this document. And again, this is an example. Your document might be different than this, but this is an idea as to what PennDOT is seeking from you. So you'll see the name of your company up here, a statement of direct labor, fringe benefits, and general overhead, and you would list for the fiscal year ended December 31st, 2021 or 22, whatever is applicable, if again your fiscal year ends at the end of December. And what they are looking for, again, in year 1, this would just be an estimate. So they're not looking for actual costs. They're just looking for you to start to think about how you would accumulate the data which you will need to supply in year 2. But essentially, they want an estimated cost breakdown for these various items, which includes direct labor and indirect costs. And these indirect costs include things that are listed here: benefits, i.e. bonuses, 401k, paid time off, vacation, sick time, or holiday, insurances, including disability, life insurance, medical insurance, workers' comp insurance, payroll taxes, FICA and Medicare, and then FUTA and SUTA, which are federal unemployment taxes and state unemployment taxes. So these are fringe benefits, indirect costs. You may not know these numbers exactly, but they want you to make an estimate as to what these would be for your most recent fiscal year. And then the form goes on to seek other overhead items, things like indirect labor, let's say for administrative staff, secretaries, accounting people if you have any, office managers, etc. If you have lodging, meals, and travel expenses, employee mileage reimbursements if there were any, rentals, subconsultants, advertising and marketing costs, automobile expenses, bank service charges, contributions and gifts, depreciation expense, dues and subscriptions, insurance for automobiles, insurance for business liability, interest expense, licenses and permits, maintenance and repairs, meals and entertainment, miscellaneous fees, fines, office expenses, etc. So this is a laundry list in a typical company. You may have these, you may not have these, but PennDOT is looking for an initial estimate of what some of these costs are for your organization for the first year that you are about to enter into the Safe Harbor program. So this is what they're looking for in year 1. You can find this document in the AASHTO audit guide on the internet in Chapter 5. It gives you a sample schedule. Again, you may or may not have the information in this format. Ultimately, you will need to work toward that as you begin to exit your way out of the Safe Harbor program. But again, this is an initial document, and PennDOT is requesting an estimate for the first fiscal year of cost in this format. The 5th item you must submit is your vacation, sick leave, and bonus policies. If they're committed to writing, or you have an employee manual or employee handbook, you could provide that documentation as part of all the other, I should say, and include that with all the other information that we have discussed in this video. If you do not have a policy, you may have to write a memo that summarizes that you don't have one, or if you pay these things, how you go about paying them. So again, you need to make a submittal to describe your vacation, sick leave, and bonus policies. If you have them, if you have a policy, submit it. If you don't have a policy, indicate you don't have a policy, and that should cover this requirement. The sixth thing you must do is describe your existing accounting system's deficiencies and why that's an impediment to developing a FAR-compliant overhead rate. As we previously discussed, when you go through and fill out the ICQ questionnaire, or the internal controls questionnaire, a variety of questions in that questionnaire deal with your existing accounting system if you have one. So even though you filled out the ICQ, they're looking for a separate statement as part of the documents you have to upload to PennDOT through the ECMS portal that describes the deficiencies in your system. Maybe you don't have a system, maybe it's not robust and doesn't break down the costs to the extent required to develop a system, a FAR compliant system, but in any event, they want a statement or statements from you to describe your existing accounting system. The seventh thing you must do is describe how the deficiencies that you just mentioned in the prior slide will be addressed. So once you've identified your deficiencies, then PennDOT is looking for some idea on how you will address these deficiencies. How will you become compliant while you are in the Safe Harbor program? And again, you can be in the Safe Harbor program for up to 4 years. Ultimately, PennDOT wants you to come out of the Safe Harbor program and go into a FAR compliant program. So PennDOT is looking for guidance from you on how you will correct your deficiencies so that you can get out of the Safe Harbor program eventually. This may include hiring an employee or firm to help you with your accounting systems or accounting documentation. So those were 7 items that we went through that need to be completed. And once you complete all of these items, you will need to combine those items into a single PDF and upload those to PennDOT via the ECMS portal. There's a separate training module explaining the mechanics of submitting your Safe Harbor overhead rate application via the ECMS portal. That module will explain the mechanics of logging onto ECMS, how you go through the forms and the screens so that you can apply for the Safe Harbor rate and you can upload your documents. So here are some concluding remarks. Until and unless your overhead rate is submitted and approved, you cannot be approved for any work. You cannot perform any work. You cannot invoice for any work. You cannot be paid for any work. Therefore, applying for your overhead rate is one of the first tasks you should perform after you register for work with PennDOT. Thank you for watching, and look for other videos in this series.